Rahul Arora, CEO of Nirmal Bang Institutional Equities, with us as well. Rahul, you would argue, and thank you so much, Rahul, for agreeing to this request, because I know it was a bit of a last minute for you, so appreciate you accommodating this. But it's kind of playing out as per script for you. The Indian cricket team and the markets, both of them are not quite faring as per what people would want.
Morning, Neeraj, and thank you for having me on the show. So I think, Neeraj, this was, I mean, you've probably heard it enough and you'll probably get bored with my answer, but I think this was long overdue. I think there was a certain reality check that was required in the market. Fundamental earnings growth was never supporting where the valuations were in the first place. And, we saw that beginning with the defense sector about 4 months back. It went on to the EMS side, consumer durables, electricals. It slowly moved into IT services, then consumer staples again after the results, and now it's percolating into auto. So I think you're sort of seeing, Neeraj, as we were discussing the other day on Mohra Trading as well. This is probably the worst earnings cycle that we have seen going into a Diwali in a long, long time. What is very evident, Neeraj, is that the rural economy is in a mess. I think when you have Hindustan Lever coming out with 2-3% kind of volume growth, two-wheeler manufacturers giving you the kind of numbers that they are, DMart just about getting into teens in terms of top line growth, and even certain consumer discretionary plays like PVR. I mean, you look at the stock of PVR today. I think that's also taken a bit of a knock on the chin, despite a big ticket Diwali release. So I think the problem, Neeraj, here is the biggest earnings growth in India over the last 10 years has come in because of margin expansion, and over the last 5 years because of balance sheet deleveraging. So you've had debt come down, interest costs come down, and therefore profitability growing. From here, I think, Neeraj, the entire onus is going to be on top line growth, and the visibility of that seems to be lacking. And I think the market is now adjusting to that new order reality. I still don't think we're going to fall off a cliff. I still think that somewhere around 22,000 we will find a floor on the Nifty. But I think the move to 26,000 now, from where we began this fall, could be a very challenging one.